Hydrogen energy is no longer a concept of the future. It is rapidly reshaping the energy landscape today. Investors around the world are increasingly focused on hydrogen stocks as governments and corporations aggressively push for net zero carbon emissions. Hydrogen is versatile. It can store energy, power vehicles, and replace fossil fuels in industrial processes. Among the leading companies in this sector is Plug Power, a pioneer in hydrogen fuel cells and green hydrogen solutions. Yet the story of hydrogen is bigger than one company. The entire industry is on the brink of a transformation that could surprise even seasoned investors. Imagine a world where trucks, trains, and buses run entirely on hydrogen. Warehouses and factories operate on clean fuel, and energy grids store excess solar and wind energy in hydrogen form. This future is not decades away, it is happening now. The global urgency for alternative energy sources is accelerating faster than many anticipated. The first key factor driving hydrogen stock growth is global demand for clean energy. Across the world, governments are setting ambitious targets for carbon neutrality. In Europe, billions are being invested into electrolyzers and hydrogen infrastructure. South Korea aims to have tens of thousands of hydrogen-powered vehicles on the road within a few years. Japan supports hydrogen stations as a strategic energy security measure. In the United States, programs under the Inflation Reduction Act incentivize both hydrogen production and adoption. These large-scale efforts create a rapidly expanding, addressable market for companies like Plug Power. Many investors overlook the unseen opportunities. For example, warehouses using hundreds of hydrogen-powered forklifts benefit from lower operational costs, longer runtime, and zero emissions. These contracts often provide steady, recurring revenue streams for companies supplying the fuel cells. Similarly, logistics companies adopting hydrogen trucks can create multi-year deals that significantly strengthen a hydrogen company's balance sheet. Hydrogen adoption aligns with the global push for energy independence. Countries that produce hydrogen domestically can reduce reliance on imported oil and gas, stabilizing energy prices and improving national security. This strategic angle increases demand for proven hydrogen solutions. The challenge for investors is timing. While governments are making commitments, infrastructure build-out takes time, and adoption rates may fluctuate. However, companies already positioned with technology, partnerships, and supply chains are poised to capture market share as adoption accelerates. This creates a high-potential opportunity for early investors in leading hydrogen stocks. The second factor fueling the growth of hydrogen stocks is rapid technological advancement. Fuel cells, electrolyzers, and hydrogen storage solutions are improving exponentially. Plug Power has invested heavily in research and development to enhance efficiency, reduce costs, and create durable, scalable solutions. As technology improves, hydrogen becomes increasingly competitive with traditional energy sources. The unexpected twist is that technology adoption often precedes revenue realization. A company may appear expensive on paper because earnings lag behind technological breakthroughs. However, once adoption scales, the stock may surge rapidly, rewarding early investors. Vertical integration, where a company controls production, storage, and distribution, further strengthens its competitive position. Green hydrogen is another critical innovation. By producing hydrogen using renewable energy sources like wind and solar, companies can eliminate carbon emissions during production. Governments are likely to heavily support green hydrogen through subsidies and incentives, adding another tailwind for investors. The third factor is strategic partnerships. Hydrogen adoption is a complex process, requiring cooperation across multiple sectors. Plug Power has partnered with logistics companies, automotive manufacturers, and energy providers. These partnerships provide recurring revenue, expand market reach, and validate technology on a global scale. However, partnerships carry hidden complexities. Many agreements have operational risk clauses. If the technology fails to meet performance standards, the hydrogen company may bear the cost, creating a risk investors need to evaluate. Savvy investors study the details of these partnerships to identify companies with both growth potential and operational stability. Diversification of partnerships is crucial. Working with multiple industries and countries reduces dependency on one market segment, creating resilience. A company supplying both industrial hydrogen for steel production and fuel cells for transportation has multiple revenue streams, stabilizing earnings in uncertain markets. Technological edge and strong partnerships together create a high barrier for competitors. Late entrants may innovate faster technologically, but without established contracts and supply chains, scaling quickly becomes difficult. Early movers with solid partnerships are therefore positioned for long-term growth and potential market dominance. The fourth factor driving hydrogen stock growth is multi-sector applicability. Hydrogen is not confined to one industry. It can power transportation, industrial manufacturing, energy storage, and even aviation. This multi-sector potential reduces reliance on a single market, increasing growth stability for leading companies. For instance, a company producing hydrogen for commercial trucks may also supply steel factories or airports with fuel cells. Each sector adoption reinforces the other, creating compounding growth opportunities. Investors who only focus on a single application may miss the bigger picture. The fifth factor is early mover advantage. Companies like Plug Power and Ballard Energy were early to develop scalable hydrogen fuel cells. Early movers benefit from patents, established supply chains, and industry expertise that late entrants struggle to replicate. A strategic acquisition or technology license can suddenly position an early mover as the market leader, creating a surprise upside for investors. Early mover advantage also allows companies to secure government contracts and subsidies before competitors. This access can be a hidden catalyst for stock appreciation that many investors overlook. Patents, intellectual property, and operational know-how form a protective moat around the leading hydrogen firms, making it harder for new competitors to disrupt the market quickly. Despite enormous growth potential, hydrogen stocks are not without risks. Production remains expensive, infrastructure is limited, and technological or operational failures can affect results. Policy changes, subsidies, or incentives may also shift, creating uncertainty. Investors must balance growth opportunities against these potential risks to make informed decisions. Financial analysis is critical. Companies like Plug Power invest heavily in R&D and infrastructure, which can depress short-term earnings but support long-term growth. Many investors fail to understand the lag between technology development and revenue realization. Recognizing this lag is where opportunity and suspense exist for the most attentive investors. The hydrogen industry is dynamic and complex. Innovation, strategic partnerships, and government policy all intersect to determine which companies succeed. Investors need to monitor technological progress, adoption rates, infrastructure build-out, and global policy to make informed decisions. Market risks include high production costs, limited distribution networks, and operational challenges, unexpected technological failures or delays. An infrastructure rollout could temporarily depress stock prices. Political shifts, policy changes, or subsidy adjustments could also influence the market unexpectedly, adding suspense for investors tracking hydrogen stocks. Financial scrutiny is essential. Revenue growth, operating margins, cash flow, and investment efficiency provide insight into long-term viability. Companies that can manage costs while scaling technology adoption efficiently are more likely to deliver sustainable growth. Investors who recognize hidden opportunities and risks early can capitalize on market surprises before the broader market reacts. In summary, hydrogen stocks could experience explosive growth due to global demand for clean energy, technological advancements, strategic partnerships, multi-sector adoption, and early mover advantages. Companies like Plug Power are strategically positioned to benefit, but investors must remain vigilant regarding production costs, infrastructure limitations, and policy uncertainties. For viewers looking to dive deeper, full detailed analysis including charts, predictions, and comparisons of the top hydrogen companies is available in the video link in the description. Understanding these dynamics, the hidden risks, and the potential upside can help investors make informed decisions and position themselves for potential growth in the hydrogen sector in the coming years.